Hello and welcome to another Smaulgld live stream. It is March 7th, Thursday evening 2019. Tonight's topic is ECB rate decision slams gold and silver, boosts the dollar. Very interesting market reaction today. No surprises that the dollar did better today on the ECB announcement, but surprising that gold and silver did not really rise, at least somewhat in tandem with the dollar's rise. We're going to get to the ECB statement later on in the program, Mario Draghi's comments, and the market reaction. First, let's take a look, though, at the general market action today. The stock market was down today. The stock market was down 200 points. The Dow Jones was down 200 points to 25,473. That was down 0.78%. The NASDAQ was down over a percentage point, down to 74.21, down 84 points. S&P 500 down 22 points, or about 0.81% to 27.48. So we're seeing a nice retrenchment in the stock market the last week or so. The dollar index, though, let's take also a look at the dollar index. The dollar index has been on the ascent. Remember all that talk a year or two ago? China to crush the dollar. We don't hear that nonsense anymore. The dollar's been getting stronger. Let me show you a chart on what's been happening with the dollar and the dollar index. It only went higher today. The chart I'm going to show you doesn't have the reflect today's index, but the dollar index is now at 97.59, so it went up a little bit more, and up almost a percentage point today. This chart shows it at 96.8. The dollar index is basically, I think it's 58% euro, and then again versus the euro, and then it goes against the Japanese yen, Swedish krona, Swiss franc. But you can see here, since QE and since the end of QE, and they started talking about raising rates, the dollar index has really gone higher. And the reason for that is that when the Fed stopped QE finally, and then started talking about in 2014 raising rates, and actually didn't raise them only once in 2015 and only once in 2016. During that time period, the ECB started for the first time to do quantitative easing, and Japan also, as soon as the Fed finished their QE program, started their own. So ECB started a few months later, and that was at the prompting of Vice Chair Stanley Fischer, who is big buddies or mentor to Mario Draghi, the current ECB president. And this belies the whole argument about currency wars. Was another meme in the, I want to call it the pumper community. They kept talking about currency wars, when in fact all this stuff is currency coordination between central banks. It was the United States or the Fed's turn to stop the quantitative easing, to regain the dollar's footing. You could see it had gone down too low, to raise interest rates, and to stop the QE. And that meant it was time for the ECB, Bank of England, Japan, to start doing their own. And eventually it'll come time for the United States to start cutting rates, and then we'll start to see the interest rates rise in Europe and in England and other, maybe even in Japan one day. But right now, this move today actually gives the Fed the opportunity, if they wanted to, a chance to raise interest rates a little bit further, just because they can put a little more further room between themselves and the ECB. All right, well, let's look at the gold and silver prices, though, today. As I mentioned, they did not move much. The gold price was down $1 or so. Now, it's been down for a while. It's below 1,300. Got as high as 1,350. It's now at 1,285. Again, not down too much, but that's just today. It did rebound a little bit after the ECB announcement, but not enough to finish in positive territory. Same with silver. Silver was down a nickel, and again, nickel. Silver was, I don't know what nickel. Let's see what nickel did today. Silver was down a nickel, and nickel was down about less than a penny per ton. Okay, but the silver price had fallen below $15. That's not good. Gotten as low as $14.91, closed at $15.02, and right now that's where it sits at $15.02 as well. So the gold-silver ratio did not improve at all today. Over on the cryptos, this story, I mean, this is classic reporting, or not reporting, but hyping. And this is about Jack Dorsey. Now, the other day I did download this Cash app to see how it works. And I bought $25 worth of Bitcoin on it. And strange, because you buy it and then you send in your data, I mean your ID, take a picture of yourself, and then they say I can withdraw this. But it looks like the way you withdraw it is it just gets withdrawn right into your Cash account, your Cash app. So then it would just move the Bitcoin value over to the Cash. So I don't think you get the Bitcoin. It says it looks like I'm credited 0.0006 whatever Bitcoin. But I don't know if I can send this to anyone. Anyway, that's not the point. The point is, in looking at this, it says that you can buy $10,000 per week. And then it says you can withdraw $2,000 per day, $5,000 per week. And then it says you can sell unlimited. Now, that $10,000 a week looks like some type of, it's like an app limit. And Jack Dorsey was talking about how people were saying they were buying every week. And he mentioned that he couldn't do that. And the implication was this week, because he had already purchased $10,000 worth of Bitcoin on the app. And a lot of the stories made it sound like he's maxing out his weekly Bitcoin buy limit. That he's doing this each and every week, that he's just gone all in. And CNBC had a thing on. I'm not going to play it for you here. But same concept. Not mentioning that maybe, yeah, he might have bought 10,000 this particular week. He didn't say every week I religiously hit the $10,000 purchase. That would be a lot, you know, to spend $10,000 a week on anything would be a big deal. I can see a rich guy like that spending $10,000 a week, 1 week. But in order, you know, he'd be buying $520,000 worth of Bitcoin. I'm not sure. He could probably afford it. Maybe he is buying that amount a week, but that's not what he said. He just said that he indicated it was this week. But that's where we are with this. Once you start getting into pumping, you find that. Here's an interesting thing. You know, Nouriel Roubini is an economist. He's like Jamie Dimon used to be, just constantly trashing Bitcoin. And then claiming that he's been right ever since. I mean, he was trashing when it was like $100. And then the price goes down. He says, see? See what? Then it goes to 1,000, and then it drops down to 300. He says, see? And then it goes to 3,000, and he's quiet. And then it goes to 20,000, drops to 3,000. He's running around saying he's right again. I don't understand that. But this guy, Niall Ferguson, interesting economist. He had done a very interesting series on money about 10 years ago. It's worth watching. You can get it for free. I think it's on not Netflix. I think it is. It's either part of Amazon Prime or it's on Netflix. It might even be on YouTube. But he was against Bitcoin, saying it was delusion. And now, again, you have to change your perception of things as time goes on. If it had gone away, he could say, you see, it was a delusion. I was right. But if all you're interested in is holding on to your own opinion for as long as you can, even though the reality is saying something different, then he's smart to say, well, maybe it isn't a complete delusion. And you have to, I mean, it's 10 years now. The price is $3,000 some odd dollars, and there are people using it. It's not like the whole world is using it, but it is worth $70-80 billion, and it's not gone away. So it's not a delusion. People talk digital illusions of this. So anyway, it was interesting that he adjusted his view, and it may turn out to be a delusion, but he's saying it's not a complete delusion. And 10 years has shown that you can't have a delusion for that long. Usually these madness of crowds and delusions, they are short-lived. Bubbles last a few years. I'm talking about manias, not, you could call a lot of things bubbles, and they can last for a long time. But manias don't last for a decade. So Bitcoin is not really a mania. I think it goes through mania phases. And I think we've had 3 or 4 of those before. And each mania ends up being bigger than the last one. Could be there's another one on the way. Could be that was the last one, and then it is a delusion. But interesting that at least he's recognized that it may not be a complete delusion. We'll have to check in with Neil, I guess his name is, in a little while. All right, let's take a look now. The main part of the program with the ECB. All right, so the European Central Bank produced this chart showing the inflation rate, economic growth. Now, the inflation rate and the economic growth in the Eurozone is lower than the United States. It's pretty much stagnant, and they're not projecting it to be much better. So that led them to their decision today, basically to do nothing except instead of they moved the goalpost out further for when they will stop buying bonds, when they will keep interest rates where they are. And that is what pushed the dollar higher today, because it meant that the ECB is still very accommodative, has expanded the time horizon for their accommodation. More QE coming. They've put off the rate hikes. None this year. They're not going to do it this year. And that's, it's only March. And for them to say that, they must be pretty confident that they need, in their minds, to keep interest rates where they are, not even think about raising them. Forward guidance, yakking to the markets, letting them know it's not happening this year. That's pretty dramatic. I think it's very dovish, as the commentators like to say, of Mr. Mario there. Then he was talking about, he's blaming it on China, blaming it potentially on a slowdown in the U.S., slowdown in China, slowdown in the U.S., and that's why the Eurozone is slowing down. No, I'm not going to comment on what other reasons the Eurozone might be slowed down, but they have to come up with something and to justify their monetary policy, and that is what he's saying. What else did he say today? Negative interest rates have been quite successful. I don't know, successful at what? Proving that you can actually do that? I'm not sure what he means by that. And then he says, why achieving higher inflation? This is a goal, listen. They think achieving inflation is something that if they don't get it, they've missed their goal. They somehow believe that the creation of inflation is a creator of economic growth. And that I always view as someone sees a car going down the road very fast and smoke is coming out is billowing out of the exhaust pipe. So the guy goes home and he says, how do I get my car to go faster? I got to get more smoke to come out of the exhaust. That's not really what's going on here, but that's the central bank mindset. They have convinced themselves and many others that somehow inflation is good for you. It's better to pay higher prices than lower prices, and that somehow these higher prices reflect economic growth. And let's just take a quick look at the statement, and then we're going to get to your comments. So here's the rationale. They decided to keep the key ECB interest rate unchanged. We now expect them to remain at their present levels at least through the end of 2019. And this is why the dollar rallied today, because remember, the euro is 58% of the dollar index. And in any case, as long as necessary, this is almost Draghi's do whatever it takes to ensure the continued sustained convergence of inflation to levels that are below but close to 2,000%, 2% over the medium term. So they're clearly thinking the lower they keep interest rates, the better chance they have of meeting their at least near 2% inflation rate. Second, they're going to continue reinvesting in full the principal payments for maturing securities purchased under the asset purchase program for an extended period of time past the date when they start raising key ECB interest rates. So even when, at that someday mythical date, perhaps in 2020, when they raise interest rates, they're still going to be rolling over the principal payments from the maturing securities. And they buy, I mean, their QE is bigger now than the Fed's was. The Fed's was, I think, $4 trillion. Theirs is like 5.4 trillion. So it's even bigger. And both economies are about the same size. So the ECB has been doing QE bigger and longer than, some would say better, than the Fed did. And that, again, makes the Fed look prudent. Hey, the Fed, they managed to taper. They managed to end QE. They managed to raise interest rates 9 times, whereas these guys over in the ECB in Japan, China, they're just monetizing debt and keeping interest rates low. And not only are the ECB buying bonds, they're buying corporate bonds. The United States hasn't done that. The closest they did to doing that was buying mortgage-backed securities and U.S. agency debt, but they never bought like Apple debt or Google debt, stuff like that. And in any case, as long as necessary to maintain favorable liquidity conditions and an ample degree of monetary accommodation. So this is as far as the eye can see, really. I mean, they always say the foreseeable future. What does that mean? How far can you see into the future? Well, they're saying no rate hikes until at least the end of 2019. And then even when we do raise rates, we're going to continue reinvesting in full the principal payments for maturing securities for an extended period of time past that date when we start raising rates. Then they've got refinancing operations going as a third and fourth, continuing their lending operations as fixed rate tender procedures. Full allotment as long as necessary, and at least till the end of the reserve maintenance period starting in March 2021. So this was a real bash on the euro because it is an admission that their economy needs at least another year or more, year plus of monetary accommodation, which is already very accommodative. And now you're getting the United States. You had yesterday, if you remember, Fed San Francisco President John Williams was talking about, next time we have this recession thing, we may have to do QE again and even negative interest rates. Now, negative interest rates, well, they're already up. I mean, they're at 2.25 to 2.5. That means they'd have to bring them all the way down and then go negative. That'd be some recession if that's what they have to do. It sounds like the central banks are prepared for all this. Tomorrow, we're going to take a look at Kazakhstan and Chinese central bank buying of gold. Let me just show you the league table. We'll go into more detail tomorrow. Tomorrow in the morning, I'm going to do an interview with Matt from Silver Fortune. That'll probably be up during the day, but we'll still have our evening show. He'll put it on his site. I'll put it on my site. Here's the central bank. I didn't complete the Kazakh or the Chinese charts yet, but there you go. China up to 1,874 tons and Kazakhstan up to 353. All right. Let's see what you guys are thinking, saying behind my back over in the comments section. And let's put that up there. Oh, and thank you to people who are buying their precious metals through the Smaulgld affiliate links. That's the Bullion Money Metals Exchange and Golden Eagle Coin. It is appreciated. I do get a small commission on that. I'm not encouraging you to buy, but if you are going to buy and that's your investment decision, then please consider shopping at the SD Bullion link. And also, please consider donating to Smaulgld via Bitcoin, Litecoin, by check, Patreon, PayPal, all on your screen. I'll leave it up there to the end of the program. And of course, if you haven't got a Smaulgld mug yet, please make sure you get your Smaulgld mug. If you do have a Smaulgld mug, remember they are stackable. That is one of the main features of Smaulgld mugs. They are stackable. So all you game changers and mug stackers, have one mug, you may need to get another one. If you have a classic mug, you may want a super classic. If you have a super classic, you may want to get a classic. If you got both of those already, as some people do, then you need a beer stein. There's an endless series of Smaulgld mugs that you can buy. Just head on over to smaulgld.com, and you can see all your buying options there. All right, let's see what you guys are saying. Okay. And is here. Ricardo Joseph DiMarco is here. Pablo, hola. Okay. Pablo Pina, good evening, Carl. You having popcorn from a Smaulgld mug? I'm annoying my wife by being here. She has put off watching the Umbrella Academy until this is over. We'll make it short for your wife's benefit. We should be done in about 10 minutes unless the comments are longer. Carl, thanks for letting us know. We're 20 minutes in. This might be one of our shorter podcasts, but that's fine. Okay, Joe Lazaro. Cash App seems like COMEX. You get exposure to the economy, but you don't take delivery. Yeah, and I don't know how they manage their inventory, Joe. What I saw, what got me interested, the reason I did this was they said they had sold 50 million worth of Bitcoin in the last quarter of last year, 166 million all year, which showed that each quarter they showed sequential growth in Bitcoin sales. And then they also showed how much money they made on that. So like on 166 million in gross Bitcoin revenues, I think they made like $2 million. So they make the spread. I think they buy a certain amount of they buy a certain amount of Bitcoin and then they sell it at a markup. So I'm not sure how that works, but it looks like on my thing here, I don't know. It says I can buy or sell it. I might have to spend more time with this. It says you can withdraw, but let me see if I withdraw Bitcoin. Now, if you withdraw it, you just withdraw it to your cash, and if you want to send it, I think you can only send it within this ecosystem. Anyway, I'll let you guys know. Maybe I'll do a video just showing what's on my phone here, but all right. But in a way, what's interesting about it is, let's say you don't even know what Bitcoin, I know too much now, but if I didn't know anything, this just shows me I have $24.80 worth of Bitcoin. And in some respects, that is all I need to know. And if it's really there, or if it's the value of it, and then I'm using it, I can use it, it looks like, interchangeably with cash. Yeah, I don't know. I don't want to keep talking about what I don't know because that's not helpful. All right. Stacking asset. Gold down 80 cents. Slammed. Hey, you're figuring it out, stacking. You look at some of these YouTube headlines and other channels, they get 5 to 10 times the views and some of the things they say. Yes, the rate decision slammed gold and silver and boosted the dollar. And actually, you would have expected the dollar and silver and gold to have gone up today. If the ECB is basically saying we're going to keep rates at 0, we're going to print money. It's not like the ECB is a minor portion of the world's economy, slightly bigger than the United States. But I do take the point. But we talked about this with the group a while back, that I was going to use a bit more catchy headlines to attach attention, just because if I don't, if you give away the story, if you just say ECB keeps rates where they are, then no one's going to click on it. But why? You just told them what it's about. At least I don't have here game over, silver set to skyrocket on ECB rate decision when collapse. Fiona Whale and Pablo, 200 points is nothing compared with the Dow. That's true. Well, we mentioned, what was 200 points today? It was 0.78%. William Burkroll, the only ink with a nice upward growth rate in earnings is Smaulgld. The rest, that's right. Is that close? Pablo, I know, Fiona, the dramatic move today was the dollar, but that was big. When the dollar was up 1%, it's a lot for a currency to go up 1%. Silver stacker for life. I will keep buying gold and silver as long as these prices are around. Turn fiat notes into sound money. Well, if you're in Europe, actually, tomorrow night I'll do that. Maybe I could check that out right now. The price of gold in euros probably went up. Yeah, I got to do it tomorrow because it's not updated yet. Probably went up big time today in euros. So, yes, when you buy gold and silver, in your home currency, if your home currency is weak, you're always going to do pretty well, especially with gold. The problem is that if you're a dollar person or you're trading in dollars, the dollar is very strong. You may call it toilet paper, you may call it worthless, you can call it unsustainable, but it is the most sustainable, the most widely used, the most widely desired currency on earth. And that gives it value. It may not be backed by any commodity or anything, but it's backed by the idea that everyone uses it. And because everyone uses it, everyone needs it. And you have to look no further than emerging markets and even China. They issue their debt in dollars, so they need dollars. That's what's keeping the dollar strong and even stronger than gold and silver, because you don't need gold and silver. There's no need for silver. You could say I have it to protect myself, but you're not going to spend it. You're going to just store it. You're not going to use it to pay down debt. You don't need it. There's no need for gold or silver other than their industrial uses. Even jewelry is not a need. Jewelry is what? Jewelry is something you want to have. It's a luxury item. That's why, if people are scratching their heads and wondering why gold and silver are going higher, well, that's one of the reasons. But they are going higher versus other currencies. We've done that from time to time. Maybe tomorrow we'll look at how gold is doing versus the euro. Yeah, so Pablo says if the dollar continues to the moon, that's giving tail gold down. Yes. No Moronica. No, Carl, if I did Moronica, your wife would never get you back. So we got to cut it short tonight. Unless the markets are chicken running around with no heads, tossing Molotovs, and gold can go either way. That is correct. AOC is clickbait. LOL. Yeah. I did do, I don't know if you guys remember when I did the new silver deal, I had a lookalike on there, and she had her kind of crazy eyes holding over the silver ingots there. Tossing Molotovs, U.S. is definite, dollars definitely defended by the U.S. military. Yes, it's defended by the military. It's defended by the need for countries to have what they think is a stable reserve, so they buy U.S. treasuries. That's right. The U.S. doesn't have a military and nukes. Yes, what the euro is, and the reason the euro is relatively strong, I think it's stronger than it should be, is just because it operates as well. If the United States, if we can't use the dollar for whatever reason, well, we can have euro. So it is a diversification play. It's definitely second fiddle, but it does have a substantial amount of currency, so to speak, with other foreign central banks. William Berkmer, in the U.S., the best way to support PM purchases to pay off all credit card debt. Yes, the Fed has built a fractional reserve with our debt with interest attached as the law for capital creation. Oh, that's right. Unfortunately, though, individuals can't do much. The amount of credit and debt created, and it's not just the United States. I mean, a lot of people just say focus on the U.S. Unsustainable. Yeah, okay. But I just mentioned the European Central Bank's QE is even bigger. It's 5.4 trillion. Japan's been doing it for 20 years. China has done more, 60% of the world's debt in the last 6 years. So it's not just the United States. This is a global phenomenon. The people that go on about it, I don't think they understand it. They learn one thing. United States debt is unsustainable. And the dollar is going to collapse. Okay. Why? They don't understand that the demand for the dollar, irrespective of the flaws in the debt, is there, whereas there isn't the same demand for the euro. There is certainly no demand for the Chinese RMB, yuan, whatever you want to call it, the yuan. There's no demand for the ruble. There is demand for the dollar. And if you look at it only from the point of view of the flaws of the dollar, you say, why would anyone want it? Because you're not looking at the whole picture. And you're looking at YouTubes that tell you one thing and only one side, and then you believe it, and that's all you believe. Silver is rarer than gold. You know, you start saying these things, they become a mantra. And I don't think people look enough. And unfortunately, most of my colleagues in this gold and silver analysis, they repeat each other, and they repeat one fraction of the whole story. The fraction that fits their worldview, that gold and silver are set to skyrocket, and then they scratch their heads for 10 years and wonder why gold is still $15. And all they can say is, it is manipulated. And JP Morgan, they were COMEX default, JP Morgan, gold back yuan, silver set to skyrocket, powers that be, Rothschilds, whatever it is. Not realizing that there's a lot of other factors as to why silver is where it is, and that's where we are. And I want to thank the Smaulgld mug stackers and patrons and game changers for joining me tonight. I don't know if gold's going to shoot over 2,000, go under 800, says City Guyable. It's the darndest thing, he says. Yes, it is indeed. The one thing about gold is it does seem to hold up a lot better than silver. And again, there's a reason for that too. All right, Carl Joseph DeMarco, you can get back to your domestic obligations, and Pablo, you could take your dog for a walk, and everyone else could head on out. And I'm going to do the same, and I want to thank you for joining me tonight. And remember to join us each and every night around this time. Tomorrow we'll have up the Silver Fortune interview with Matt, and then tomorrow night we will get back on. We'll probably do Kazakhstan and Chinese gold reserves update. And then remember, Saturday night is Saturday Night Silver with Smaulgld. All right, Fiona, we'll miss you again tomorrow, but we'll see you hopefully on Saturday night. Good night. Lucky's going to head on out. All right, guys. Good night.